Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we have another edition of Deal Debrief, where we get the download on recent transactions from the people who put them together. On today's episode, we're exploring the world of aircraft leasing, an increasingly critical part of the aviation economy. Ryan Schwartz, head of Brookfield's corporate credit group, is here with us to discuss how we supported the acquisition of Air Lease Corporation, a leading player in the space. Ryan, welcome to the podcast. Why don't you introduce yourself to our audience and tell them what you do at Brookfield?
Yeah, absolutely. I'm Ryan Schwartz. I'm a managing director at Brookfield, and I lead the corporate credit team. I've been here at Brookfield for about 3.5 years. And prior to this, I led the direct lending business at Global Atlantic. Prior to that, I was at Lone Star Funds and their private credit and special situations investing group. My team, the corporate credit team, primarily focuses on 3 main products across a range of industries. Those are direct lending, private investment grade, and fund finance. And following the recent news of our acquisition of Oaktree's remaining shares, my team will also work closely with the Oaktree team, growing our already market-leading credit business.
So for those who may not be familiar with this industry, what does Air Lease Corporation actually do, and what role do they play in the aviation sector?
Air Lease is an aircraft lessor founded in 2010. Simply put, purchasing new commercial passenger aircraft from the aircraft OEMs like Boeing and Airbus. Then they lease those aircraft to airline customers globally. It's a massively diversified business with over 100 airline lessees across nearly 60 countries worldwide. Very, very high quality fleet with extremely young aircraft base skewed towards newer gen aircraft and a long-term weighted average remaining lease term across its leases, which provides a really strong element of revenue visibility and cash flow stability.
So really important for people, right, who can't buy an entire airplane and hold it on their balance sheet for a long time.
Exactly. And it's critical to the airline industry so that airlines are able to grow their businesses without the financial burden of having to acquire aircraft.
That's a big purchase. It's a big line item. So talk to us a little bit about, like you said, it's a big industry. There's a lot of these types of firms like Air Lease Corporation. There's also a lot of companies looking to lease aircraft. So how did we come to finding that this was a good fit for Brookfield, for how we work?
There were a few factors here that made this a really good fit for Brookfield. Scale is an important one. The level of complexity of this transaction and the industry expertise that was required here and that we ultimately brought to the table. The solution that we provided here, which was a hybrid capital structure, what this is really a extremely flexible capital solution that we would provide typically to a large creditworthy counterparty. It's not your vanilla 4A2 private placement where you're earning 25 to 50 bips spread premiums to liquids. This is a much more value-added solution, and it's priced at an extremely attractive spread premium for our clients. When I use the term a vanilla 4A2 private placement, there's a whole market for these that are really not too dissimilar to your typical public bond issuances. They're just private, and you're earning a bit of a spread premium on it, but not much, and there's no complexity added besides it not being a public instrument. Each transaction in this space is quite bespoke, and we're really structuring each of these to solve a number of various goals for our partners. And I use the term partner here, and it's really an important point, as these structures are really akin to equity transactions, and it's really a long-term partnership model.
Got it. And so sounds like you're saying these solutions, like we're talking about with this one, are much more bespoke, much more specialized, and much more custom to the partner that you're working with. Is that right?
That's exactly right. I used the term earlier, hybrid capital solutions, and that's really what we're doing here. We're providing a solution that has elements that feel like equity to our counterparties and feel like debt to us. And when we structure these appropriately, the risk that we're taking should be akin to investment grade credit risk. pulling all of these together and having all of these points line up is not an easy task. And they're highly structured, highly negotiated transactions. But when they're done correctly, it's an amazing product for our clients, for insurance companies in particular, but really for any type of investor that has a investment grade portion to their mandate and is willing to trade liquidity and take on incremental complexity for an attractive spread premium. That could be other clients besides insurance companies. Pension funds come to mind as a great example as well.
Yeah, and I can tell, I mean, there's a lot of stakeholders here. There's a lot of elements to these kinds of deals. Can you try to paint the picture? How does something like this come to be also over time? Who would they even know to go to at a firm like ours? Or how would all of these stakeholders that you're talking about start to come to the table at the same time and place to work on a transaction like this?
Yeah, it's a great question. And they are longer term transactions. This one in particular, the Air Lease transaction, my team had been working on this for over 8 months. It was extremely complex, a ton of structuring, in-depth negotiations, the underwriting, the execution. Nothing was simple, but
It never is.
that's what we love about it. But these are solutions that we really provide across the entire platform at Brookfield Credit. This one specifically fell within our corporate credit mandate, but we have similar types of solutions for infrastructure and markets with real estate structures.
There's a whole world of private investment grade within ABF or asset-backed finance that's super exciting as well.
And it really just comes down to who are we working with? What are the goals that they're trying to solve? And we will take all of that and structure something that solves those goals while structuring a risk profile that is attractive to us.
So in terms of some of the stakeholders and all the different counterparties you're talking about for a transaction that is this complex and this nuanced, what was the bench of different stakeholders that you ultimately had to bring together to make this happen?
This investment went to a number of our clients. Brookfield Wealth Solutions was a large investor. There were a number of third-party credit SMAs, which typically would include insurance companies, pension plans, and family offices. In this particular instance, one of our strategic credit managers, Castlelake, was involved. And Castlelake's involvement was critical here. We could not have done this without them. I mentioned that we brought in-depth industry expertise to the table here. That was really brought through Castlelake, one of the leading investors globally in aviation. So we had them alongside us.
So you mentioned, Ryan, some of the other counterparties we brought into this, insurance companies, family offices, and the like. How do those different counterparties and stakeholders think about where a transaction like this fits into their overall portfolio? How do they evaluate? What's the context that they might need?
So each of these transactions is structured as investment grade style risk. And we will get ratings on these that are investment grade, so triple B or higher. The type of investor that would like this type of product is somebody who has an allocation in their existing portfolio to investment grade credit. Often that allocation would be liquid investment grade, but if there's a client who is willing to take a portion of their liquid investment grade portfolio and get paid a material spread premium for illiquidity and complexity, then this is extremely attractive to that type of client and could be pooled within their broader investment grade mandate.
We talked a little bit about, generally speaking, why might a transaction like this be good for Brookfield? Why might it just be a good fit? How do deals like this land in your inbox? How do you source them, learn about them? And it might be specific to this sector, the aviation sector, the niche, but I'm just curious because it seems quite specialized.
Yeah, there's a number of different ways that we can source these. I wouldn't say that it's specific to aviation. There's really 3 main ways that we source these types of transactions. One is direct originations. We are idea generating and we are speaking to large cap corporate C-suites and sourcing on a direct basis. 2 would be through our banking relationships. Brookfield is a massive relationship of the banks, and banks are covering pretty much every large cap corporate globally. And so they know their clients' needs, and then they know what Brookfield's capabilities are. So that's an excellent sourcing channel as well. And the 3rd would just be through the broader Brookfield ecosystem. Often we will just get calls across Brookfield because one of our business line CEOs is friendly with the CEO of a company that is looking for something creative, and they know to call Brookfield.
As you said, your team worked on this for 8 months. It was a longer term horizon to completion. Were there specific takeaways or learnings from this one, or generally speaking, how the market feels right now that stays with you after everything has been signed?
Look, the private markets are growing and expanding, and the type of ingenuity in this product offering is really what drives that type of growth. And I'm just excited about the future of the business, and that's across the corporate credit business, across infrastructure, real estate, ABF, and really everything that we do at Brookfield. It's an extremely attractive product offering. It's not going to be attractive to every company out there, but it really is something that every treasurer and CFO should have in their financial toolkit. And I think we're going to be seeing a lot more of these solutions. So I'm excited to watch the growth in these markets.
Obviously, there's always a lot of learnings that come right after you finish transaction, but I'm curious if there's any broader trends, if you think about a slightly broader time horizon, maybe 5 to 10 years being in this space, of anything that sticks with you in terms of how things have changed, where things are going as we look ahead.
If you think about the history of private credit and direct lending used to be synonymous, and now private credit is just so much more. ABF we view to be really the frontier and the next stage of private credit. We obviously have a lot of capabilities in the ABF space through our specialized credit managers that we've acquired. And I think over the next 5 to 10 years, we're just going to see incrementally more growth in this space, creative solutions that come up, like what we were discussing with the Air Lease transaction, and then kind of a cross-pollination across our business as we utilize the specialized nature of these credit managers, similar to what we did in this transaction, working alongside Castle Lake for their aviation expertise.
It feels a little bit like an endless asset-backed finance menu. It's sort of like as many as you can learn and as much business as there is, it seems to keep expanding. Do you have that sense?
Yes, it's ever changing, ever evolving, growing. There's a ton of creativity. And as new problems come up, more solutions are invented. And that's really the nature of the private markets and the growth that we're seeing.
Well, I learned a lot. This was a great conversation, Ryan. Thank you for joining us today.
Thank you.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.